All right, to other top stories now. Finance Minister Enoch Godongwana has decided to reduce the inflation target to 3%. Earlier this year, Reserve Bank Governor Lesetja Kganyago expressed the bank's preference to target inflation at 3%, a move lamented by Godongwana, who argued that policy pronouncements would come from the National Treasury. Now, the decision brings the matter to finality, with both parties now having found each other. Delivering the mini-budget in Cape Town, Godongwana says the 3% inflation target is expected to limit government finances in the short term, but reduce the cost of living and borrowing for households.
South Africa's economic prospects are shaped not only by domestic factors, but by also global developments. Global growth is estimated to slow slightly to 3.2% in 2025. Amid ongoing trade tensions, geopolitical uncertainty, and supply chain disruptions, while the shocks of the unilateral tariffs imposed by the United States have not materialized severely as expected, their delayed effects, coupled with the rising protectionism, pose future risks to global productivity and price stability. Global equity markets have surged, driven by AI-related stocks and central banks' rate cuts. But this rally carries the risk of sudden reversals. Given this uncertainty, it is critical that we leverage the immense opportunities presented by the Sub-Sahara region. We continue to make progress in the implementation of the African Continental Free Trade Agreement to strengthen multilateralism and regional cooperation.
Thank you very much. Have a nice day, Father. Thank you.
Order, Honorable Nanda.
Domestically, we forecast real GDP growth at 1.2% for 2025, more than double the economic growth in 2024. We now forecast real GDP growth will average 1.8% between 2026 and 2028. Madam Speaker, the structural reforms we have embarked on, particularly in the energy and logistics, will be key to lifting our rate of growth closer to levels demanded by our developmental needs. Our strategy for faster growth and healthier finances continues to be anchored on 4 pillars. The first is maintaining macroeconomic stability. The second is implementing structural reforms. The third is building state capability. And the fourth, supporting growth-enhancing infrastructure. Madam Speaker, faster economic growth requires effective macroeconomic management. Over the past year, National Treasury and the Reserve Bank have jointly assessed the impact of a lower target on our economy and the fiscal framework. This work has now been concluded and recommends a revision to the target to strengthen the framework and enhance price stability by better anchoring inflation expectations and aligning South Africa to international best practice. Today, I announce a new inflation target for South Africa of 3% with a 1% point tolerance band.